Hey everyone, welcome back to another video. In today's video, I'm going to be going over a couple of stocks that announced their earnings last week that are each presenting really good buying opportunities right now in the stock market. Most of these stocks are competing in the energy sector, but there are one or two of these stocks that aren't. And on top of that, all of these stocks right now are trading below their intrinsic value per share, and they've all had really good stock performance over the last year or so. So we're going to be going over each of these stocks to figure out which ones present a really good buying opportunity from a value investing perspective. So thanks in advance for leaving a like on this video, and let's get right into it. So the first stock that I want to talk about is Devon Energy, and we can see that over the last year, Devon Energy is up 130%, even though the S&P 500 is down 4%. And so if we go into their financial statements right here, we can see that Devon Energy's revenues for the second quarter of 2022 increased year over year from $2.4 billion to $5.6 billion. And then on top of that, they reported an increase in net income from about $250 million to $1.9 billion. So that's a lot of growth for Devon Energy. They reported about $2.93 per share as well. And then right here, if we go into their cash flow statement, we can see that the cash flow provided by their operating activities for the second quarter came out to be about $2.6 billion, up from only $1 billion 1 year ago. And then we can also see that they paid out about $830 million worth of dividends to their shareholders. Given that they are an oil company, oil companies tend to pay pretty high dividends like ExxonMobil and those other companies. And then on top of that, they repurchased about $324 million of common stock in the second quarter of 2022. So they definitely returned a lot of value to their shareholders, and they've been increasing their profits year over year. And then lastly, if we look at their balance sheet, we can see that their total assets for the second quarter of 2022 totaled out to be about $23 billion. Most of that in property, plant, and equipment, which makes sense because they are an oil company. And then we can also see their total equity came out to be about $10 billion. So their business on their balance sheet seems to be financed about almost 50%, about half and half between total equity and total liabilities. And so next, what I want to do is go into this discounted cash flow model to figure out what the intrinsic value per share of Devon Energy is. All of these estimates I got from Yahoo Finance. So these are basically just estimates that analysts from Yahoo Finance are basically taking guesses at and projecting for these different businesses. And so they're basically projecting that over the next 5 years, Devon Energy is going to grow compounded annually at about 27.5%. And so for the next 5 years after that, I was conservative and I put that number at 13%. The free cash flow for Devon Energy in 2021 came out to be about $2.89 billion. And right now they have about 654 million shares outstanding. And then if I net their cash against their debt, they have about $3.4 billion worth of debt. So basically that's what each of these metrics mean for the rest of the companies that I'm going to be covering in this video, for anyone who is wondering. So basically, once we plug all of these values in, we can see that the intrinsic value per share for Devon Energy is estimated right now to be $144 per share, with a 30% margin of safety of $100 and a 50% margin of safety of $72 per share, which compared to their current share price means that Devon Energy right now, although their stock price is up over 130% over the last year, they are trading below a 50% margin of safety right now. So definitely could present a really strong buying opportunity, coupled with the fact that they had very strong financial statements and earnings growth. And then also, if I scroll to the right a little bit over here, I did a quick little competitor analysis, just measuring Devon Energy's financial ratios against the ratios of some of their biggest competitors in the energy industry. And so I compared Devon to Exxon and Chevron, and we can see that Devon Energy has a higher gross profit margin than ExxonMobil and Chevron, and they have a higher net profit margin than ExxonMobil and Chevron, and they have a higher return on assets than ExxonMobil and Chevron. So they're doing pretty good in their sector right now in terms of competition. They have good stock performance. They're trading well below a 50% margin of safety, and they have strong financial statements and good, and they're beating the market right now. So looks like Devon Energy could potentially present a good buying opportunity, but time will tell, and we'll see where it goes from here. So the next stock I want to look at is Builders First Source, and we can see that their stock is up about 30% over the last year, still beating the overall stock market. And if we look at their financial statements right here, By the way, for anyone who doesn't know, Builders First Source is the largest U.S. supplier of building products for residential construction. So that's basically how they produce their revenues. And if we look at their financial statements, we can see that their sales were up about 24.2% year over year, from about $5.5 billion to $6.9 billion. And then we can also see that their gross profit came out to be about $2.4 billion, which is up 52% year over year. So huge growth for their gross profit. And then for their net income, we can see an increase from about $497 million to almost $1 billion. So that's an increase of about 98.5% year over year. So almost a 100% increase in their net income. And then also right here, we can see their earnings per share came out to be $5.75 per share, which is up from about $2.40 year over year. And so if I scroll down here, we can see their balance sheet, and we can see that they reported total assets of about $12 billion for the second quarter of 2022. And then they have total stockholders' equity of about $5.1 billion, and then total liabilities of about $6.9 billion. And we can also see that their retained earnings increased pretty substantially from $540 to $890 million. So good to see that a business's stockholders' equity is increasing as a result of retained earnings, as opposed to them issuing more common stock and diluting their shareholders. And then lastly, right here, we can see their cash flow statement, and we can see that the net cash provided by their operating activities increased a lot, because in 2021, they actually had net cash used in operating activities, so they weren't really producing positive net cash flow. But in 2022, that increased to about $1.1 billion of operating cash flow. And we can also see from their financing activities that they repurchased about $1.2 billion worth of common stock in the second quarter of 2022. So, and also, I know it doesn't say here, but they repurchased this common stock at an average price of about $58 per share. So definitely a lot of value returned to shareholders in that regard as well. And so what I want to look at now is the discounted cash flow model. And we can see, based on these estimates from Yahoo Finance, that the intrinsic value per share for Builders First Source, or whatever their business is called, Builders First Resource, Builders First Source, is estimated to be about $200 per share, with a 30% margin of safety of $140 and $100 per share for a 50% margin of safety. So compared to their current share price, it means that Builders First Source is also trading well below a 50% margin of safety right now, even though their stock price is up 30% and they're beating the overall market right now. So similar to Devon Energy, they're beating the market. They have strong financial statements. They're trading below a 50% margin of safety, and they've shown some pretty impressive earnings growth year over year. So interested to see where Builders First Source goes from here. The next stock I want to talk about is Diamondback Energy. And we can see that this stock is up more than 60%, almost 70% over the last year. And if we look at their earnings right here, or their balance sheet, which comes up first, we can see that they reported total assets of about $23 billion. And if I scroll down here, we can see that their total liabilities came out to be about $9 billion, and their total equity was about $14 billion. So most of their business is financed by equity as opposed to debt, which is good because that means that they aren't going to be eating into their cash flows, paying down interest payments on loans and debt and financing like that. And right here, we can see their income statement, and we can see that their total revenues increased from about $1.6 billion to $2.7 billion. And then also, if I scroll down here, we can see that their net income increased from only about $328 million 1 year ago to this year. For the second quarter, they reported $1.4 billion. So very impressive earnings growth for Diamondback Energy. And then if I scroll down here, we can see eventually their cash flow statement. And we can see the net cash provided by operating activities was about almost $3 billion, up from $1.5 billion. So that's an increase of almost about 100% there. And then if I scroll down a little bit more, we can see that they repurchased shares of about $310 million at an average price of about $127 per share. So a lot of value returned to their shareholders too. And so if we look at their discounted cash flow analysis here, the intrinsic value per share, we can see that the intrinsic value per share is estimated to be about $271 per share, with a 50% margin of safety of $135 per share. So right now, Diamondback Energy is trading below a 50% margin of safety, similar to the other stocks we've talked about so far, and they have very strong earnings growth. And by the way, for Builder's First Source, I just realized that I forgot to do the competitor analysis. So basically, I compared Builder's First Source to Home Depot and Beacon Roofing Supply, and we can see that they're basically middle of the pack right here in terms of their gross profit margin, net profit margin, and then for return on assets, they have the highest efficiency in terms of getting a return on their assets relative to the rest of the competitors in their industry. And then for Diamondback Energy, we can see for their competitor analysis that they're pretty much blowing their competition out of the water in terms of gross profit margin of about 62% compared to the industry average of nearly 40%, and then net profit margin of 30% compared to about 20%, but then they're about middle of the pack in terms of return on assets. So they do have pretty strong ratios, strong financials, and they're trading at below a 50% margin of safety right now. So the next stock I want to look at is one of Warren Buffett's favorite stocks right now. He's been buying up a ton of Occidental Petroleum, and we can see that this stock is up 145% over the last year. So definitely one of the best performing stocks on our list right now. And given the fact that Warren Buffett has been purchasing a lot of shares of Occidental Petroleum, that's obviously going to be increasing the share price in the short term because there's going to be less shares on the market, so they're going to be trading for a higher price. And so if we look at their financial statements right here, we can see this is their balance sheet. If I scroll down right here, we can see they have total assets of about $74 billion. And if I scroll down a little bit more, we can see that their total stockholders' equity is about $27.8 billion. So most of their business is financed by debt as opposed to equity. And then on their income statement right here, we can see their revenues increased year over year from $6 billion to $10.7 billion. And we can see that their net income, if I scroll down here, increased from only about $100 million 1 year ago to this year for the second quarter, about $3.7 billion. So that is absolutely insane net income growth right there. And then they reported earnings per share of about $3.76 per share, which is up from a loss per share of about 10 cents per share last year. And then if I scroll down here, we can see from their cash flow statement that the net cash provided by operating activities increased from $4.2 billion to almost $9 billion. So that's more than a 100% increase in the operating cash flow. And then from their financing activities, we can see they've been doing a lot to make payments on their long-term debt. They spent about $7.1 billion in the second quarter paying down debt. So they're trying to reduce those interest payments. And then we can also see cash dividends paid came out to be about $530 million, and purchases of treasury stock was about $500 million. So they returned a little over $1 billion back to shareholders. And so if we look at their discounted cash flow model here, we can see intrinsic value per share comes out to be about $200 per share with a 50% margin of safety of $100 per share. And right now they're trading at $65 per share. So they're trading way below intrinsic value per share right now, which is probably one of the reasons why Warren Buffett likes this stock so much. On top of the fact they're up over 145% over the last year. And we saw their earnings growth, which is pretty ridiculous. They pretty much just increased from almost no earnings to more than $3 billion worth of net income in 1 year. So it's been a pretty great year for Occidental Petroleum. Definitely interested to see where they go from here. But if we look at the competitor analysis, I compared them to some of the other competitors in the industry like Diamondback Energy and Devon Energy, which we just covered. And we can see compared to those two companies, Occidental Petroleum, they're basically bottom of the pack here. They have the worst return on assets, worst net profit margin, and the worst gross profit margin. So in terms of business efficiency, it looks like Occidental Petroleum might not be the best. But in terms of stock performance and how low they're trading below their 50% margin of safety relative to their competitors, it looks like from that perspective, they definitely present a strong buying opportunity. And so the next stock I want to look at is Marathon Oil. And we can see that over the last year, Marathon Oil is up almost 100%. They're up about 92% over the last year. And if I look at these financial statements, we can see that the income statement says that their total revenue increased from about $1 billion to a little over $2 billion. So that's over a 100% increase in their revenues year over year. And then for their net income, it increased from only about $16 million in 2021 to now almost $1 billion in 2022. So massive earnings growth for Marathon Oil. And then if I scroll down here, we can see their balance sheet. They had total assets in the second quarter of 2022 totaling to about $18.2 billion, and most of their business is financed by equity as opposed to debt, $11.5 billion of equity, $6.7 billion of liabilities. And then right here for their cash flow statement, we can see that net cash provided by operating activities more than doubled year over year from $1.2 billion to $2.7 billion. And then we can see from their financing activities that they repurchased about $1.3 billion worth of shares as a part of their share buyback program, which actually, if we look at that, that makes up more than 50% of the net cash provided by their operating activities that year. So, and then on top of that, they paid out about $108 million worth of dividends. So they're definitely prioritizing returning value to their shareholders as opposed to reinvesting their cash flows back into their business right now. And so if I look at their intrinsic value per share here, it's estimated to be about $45 per share with a 30 or 50% margin of safety of $22 per share. And so compared to their current share price, it looks like they're trading right now at just a little over a 50% margin of safety. So they're not trading at as good of a value as Occidental Petroleum, but they are trading at a 50% margin of safety, which is still very good. And if we look at their competitor analysis here, similar to Occidental Petroleum, they have the worst return on assets compared to Devon Energy and Diamondback Energy, and then also the worst net profit margin. And then with gross profit margin, they're around middle of the pack, right in between Devon Energy and Diamondback Energy. And so the second to last stock I want to look at is APA Corporation. APA Corporation is up about 60% over the last year. And if we look at their financial statements right over here, we can see from their income statement that they reported total revenues of about $3 billion in 2022, up from about $2 billion in 2021. And then their net income increased almost 3 times over from about $300 million to $900 million, close to $1 billion in net income in 2022. And if I scroll down here, we can see their cash flow statement. And their net cash provided by operating activities came out to be about $2.4 billion in 2022, up from only $1.6 billion in 2021. And then from their financing activities, we can see that they're prioritizing making payments on their long-term debt right here. And then also treasury stock activity, it looks like they repurchased about $550 million worth of treasury stock. And so if we look at the intrinsic value per share, looks like it's estimated to be about $239 per share with a 50% margin of safety of $119 per share. And so compared to their current share price, that means that out of all the stocks on our list, APA Corporation might be trading at the greatest bargain compared to all the other stocks, because right now they're trading at only $34 per share. And according to the estimates from Yahoo Finance, their 50% margin of safety is $119 per share. So they're trading way below their intrinsic value per share right now and way below a 50% margin of safety. So it looks like from that perspective, they might potentially present the best buying opportunity out of all of the stocks on our list. But if we look at their competitor analysis, we can see that compared to Marathon Oil and Devon Energy, they have the highest gross profit margin and they have the lowest net profit margin, and then around middle of the pack in terms of return on assets. So pretty decent business efficiency, obviously trading at a really good price relative to their intrinsic value. They've had very strong earnings growth, and they've had very strong stock performance over the last year. Not as strong as the other stocks on this list, but it's still beating the overall market this year. And the final stock I want to look at is ConocoPhillips. And we can see that over the last year, ConocoPhillips is up almost 80% over the last year, definitely beating out the stock market this year. And then we can see that from their income statement right here, that their total revenues came out to be about $21 billion, which is up from $10 billion 1 year ago. and their net income almost doubled, or more than doubled, from $2 billion to $5.1 billion worth of net income. And so if I keep on scrolling down here, we see their balance sheet. Total assets for the second quarter of 2022 came out to be about $93 billion. And then we can see that their business is financed mostly by equity, but it's almost split down the middle 50-50. $50 billion of equity and about $43 billion worth of liabilities. And then from their cash flow statement, we can see that the operating cash flow almost doubled from around 6.3 billion to about 12.9 billion. So it did double, it more than doubled. And we can also see that from their financing activities that they repurchased about $4 billion worth of common stock and paid out $2 billion worth of dividends. So that's almost 50% of their net cash from operating activities. That's basically just been returned to shareholders. And then they also used a large number of their operating cash flow to repay their debt. So they're trying to reduce interest payments right now and return value back to their shareholders. And so if we look at their intrinsic value per share right here, we can see it's estimated to be about $224 per share with a 50% margin of safety of $112 per share. And so compared to their current share price, that means that ConocoPhillips, although they're up about 80% over the last year, they're trading at below a 50% margin of safety, according to estimates from analysts from Yahoo Finance. And then if we look at the competitor analysis here, I compared Conoco to Exxon and Chevron, and we can see their gross profit margin is higher than Exxon and Chevron, and their net profit margin and their return on assets. So in terms of business efficiency, it looks like they're outperforming some of the bigger competitors in their market. They're obviously trading at below a 50% margin of safety, and they've had incredible stock performance over the last year or so. And we could see from their financial statements that their earnings growth and their cash flow growth has definitely been very impressive over the last year. So interested to see where ConocoPhillips goes from here. But that basically covers all of the stocks I wanted to talk about in this video that announced earnings last week that are presenting really strong buying opportunities. ConocoPhillips, APA Corporation, Marathon Oil, Occidental Petroleum, Diamondback Energy, Builders First Source, and Devon Energy. All of these stocks are outperforming the market this year, and they've all had really strong financial statements. But I would definitely love to know what everyone watching this video thinks. Does anyone think that these stocks are going to continue to grow at this rate? And if so, is anyone going to be investing in these stocks? Definitely let me know in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.